On the Bloomberg, it looks fantastic.
Right.
This is our 103-inch monitor, and I'm just going to cover this up because we have a little label issue, but it doesn't look as dramatic because it's so stretched out. But Japan, you can see, way outperforming. In yellow, we have the UK. In blue, we have the US.
Right, and then I think that demonstrates the point that we were making earlier, which is that Japan has the most flexibility of any of the major economies. They have both fiscal and monetary policy going for growth, and the end result is that investors want growth. They want to participate in growth, and so they're buying Japan. Similarly, the UK, which we touched on, is probably going to let their currency weaken, boost their inflation, and try to generate some growth that way. So the UK has done quite well. And then you have the US, which has the flexibility of the Fed aggressively printing money, though the contractionary fiscal policy we talked about, but it's also a little bit of a safe haven. So what's not shown on here...
Well, and we're going to pull it up here. I mean, you can see how much better the UK and the US have done when you see, there you go, Euro stocks and then emerging markets. I was shocked, by the way, that emerging markets have so underperformed.
Well, the other thing, Matt, which is interesting about EM is that there's been a tremendous amount of money that's gone into EM equities year to date, and you still have that performance. And that really shows you that there's real distribution going on in emerging markets, which makes sense because really emerging markets of tomorrow are not going to be the emerging markets of the last decade. The last decade, it was all play on global growth. The next 5 years is going to be emerging markets, domestic demand. And as they make that switch, you have this kind of transition. And so I think we're opening up the developed economies here. They're willing to cheapen themselves, weaken their currencies to value. The emerging market economies, I think they're going to be willing to take a little currency strength because it facilitates that shift from export to domestic demand growth.
All right, and we're going to talk a little bit later on about Chile. I know you love it.